Hello everybody and welcome to this, the second in the offline series of educationals replacing the Monday evening events that were fortnightly. Ideally, I will keep them short and sweet. This one is titled Improving Your Odds. So, we accepted long ago, didn't we, that we are in fact gamblers. We are here gambling on the instruments within the market in order to make a profit. Heads or tails, up or down. Blackjack really, with much better odds, would best define it all here for me anyway. Why much better odds? Well, we're counting cards. We are valuing the deck, the table, the charts in our own time before we need make a play. We can in fact sit at the table for the entire session. We can sit at the chart for the entire day without ever placing a trade, without ever risking our stake. Maybe the setup did not occur. Maybe the value of the chart wasn't offering the right odds. Okay, so we can wait, absent, of course, any of the associated risks, because we're looking only for the high probability, low risk trades. How do we do it then? Raise our odds. Simple, really. With a blank chart like that, we've a 50-50 chance, up or down. We can add our knowledge of price action, a bearish fractal or a bullish fractal. We can look at high test bars, we can look at engulfing bars, we can look at inside bars and breakout bars. We can look at all of those things with price action and give ourselves an edge. An edge is useful. An edge is what we want. So we can add or increase our knowledge. Knowledge dispels fear, and we're given risk right out of the gate. We control the stake, so we can control the fear. That's the truth. That's the reality. An understanding of the few valued and trusted indicators we use gives a limited risk, and using the knowledge we have dispels the fear of risk. So let's add a MACD. We like our MACD. We can use it to find divergence, a higher low over a lower low, maybe the rejection of a line that we can't see right now, and a signal, the Hopper signal right here, for instance, that we're looking at. So adding knowledge of price action and or rather using knowledge of price action increases our odds. Using our knowledge of the higher value exponential moving averages will also increase our odds. There you go, rejection of a line, the rejection of a pink 55 period EMA, right there, divergence, rejection of a line. Do we have a signal? Let's look some more. Yellow crosses above green, divergence, rejection of a line, and a signal. Oh look children, a signal. DRS. That's some pretty standard and basic knowledge there from an origins version of a strategy we have. And if we add some Bollinger Bands and the PSAR, we get a heads up, hey look at me, and then we get the entry because it must be above the line. So we've improved our odds quite a lot now, haven't we? By 1, 2, 3-fold at least. Can we improve them further? Probably. We can add a higher time frame, a 3-minute price action trend. We can add the higher value EMAs on our higher time frame chart. We can add some divergence on our 3-minute chart and knowledge of other lines, Camarilla, support and resistance on our 3 or 5-minute chart. Or if we're using 15-minute and 4-hour, it's also fine. It's very flexible. We can add the same higher value EMAs on here as we have on there, and they'll impact and create the same results. We can add PSAR and Bollinger Bands, and we can even add the same trigger value EMAs, but we should look at them in terms of yellow line above white or black or whatever color you use as the middle line here. That's it. So there is a difference in how we use those tools. A lathe in the hands of an idiot won't make a beautiful spindle. It'll probably make a mess of the user and the wood. However, if we first learn to use the tools we are given, then we are applying our knowledge. When we do that properly, with consistency, it becomes a habit. What better gift than a money-making habit? So adding knowledge of price action, or rather using our knowledge of price action, increases our odds. Using our knowledge of the higher value exponential moving averages increases our odds. Using the other valid and proven pivot indicators, such as the Camarilla levels there, they increase our odds. Using a higher time frame and checking the major higher time frames increases our odds. Clearly then, there is a difference between knowing and applying the knowledge. If we begin with evens as our odds, since price can only go up or down, that's 50-50, isn't it? That's evens. Then improving our odds by using and applying our knowledge can turn the odds very much in favor of the trader. In exactly the same way a card counter, rather a professional card counter, turns the odds to his or her favor at the table on Blackjack. I hope you're finding these series useful. I hope you're finding the educationals useful. As always, please give me some feedback. Let me know what your thoughts are. But that's quite simple. Improve your odds by using the tools that we have. Please trade safe. I look forward to seeing you in the next live session or on another recorded educational. Thanks everybody. Trade safe. Bye bye.